Technology plunges nearly 2%, RSI falls to 41, a bearish trend is unfolding, driven by rising interest rates. This is what every serious investor needs to know about technology right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week the overall market context is one of elevated uncertainty, with the VIX index at 26.8, indicating a higher level of volatility and risk. In this environment, the technology sector is particularly noteworthy, as it has historically been a bellwether for market trends. Relative to the S&P 500, technology is holding its own, but the sector ETF, QQQ, has seen a decline of 1.96%, which warrants a closer look. Given the sector's significant weight in the broader market, its performance can have a substantial impact on overall market direction. With the current uncertainty and the technology sector's influence, it is essential to examine its dynamics closely, and this is why we are focusing on it this week. The interplay between earnings, valuations, and investor sentiment makes this sector deserving of attention right now. Let us start with the technical picture and what the charts are telling us. The technology sector, as represented by the QQQ ETF, has experienced a decline of 1.96% over the past week and 3.22% over the past month, indicating a bearish signal. The Relative Strength Index, or RSI, reading of 41 suggests that the sector is currently in a state of oversold conditions, which could potentially lead to a bounce or a consolidation phase. This RSI reading implies that the momentum is currently to the downside, and the trend direction is bearish. However, the conviction behind this trend is not extremely strong. Key support levels likely exist around the recent lows, while resistance levels are probably situated near the recent highs. The current move does not appear to be a sustainable breakout, but rather an extended overreach to the downside, which could be due for a correction. The technical setup worth watching this week is the potential for a short-term consolidation, as the sector attempts to find its footing and regain some upward momentum. This could potentially lead to a breakout, or a continuation of the downtrend, depending on the underlying market dynamics. Now let us look at the fundamental catalysts driving this sector. The technology sector is poised to navigate elevated uncertainty this week, with the VIX sitting at 26.8, as investors await key economic data points, including the PCE inflation data, which will provide insight into the current state of the economy. On the macro front, the sector is likely to benefit from ongoing digital transformation, with cloud computing, artificial intelligence, and semiconductor demand expected to drive growth. Key stocks such as AAPL, MSFT, NVDA, GOOGL, and Meta are signaling a mixed sector health, with some names outperforming while others face challenges. This week, we are not expecting any major earnings reports from these tech giants. However, regulatory news and macro data will be closely watched. The longer-term fundamental thesis for being positioned in the technology sector remains intact, driven by the secular trend of increasing technology adoption and innovation. As we look ahead, the sector's ability to innovate and adapt to changing consumer demands will be crucial in driving growth. The PCE inflation data will be a key catalyst, and its impact on the sector will be closely monitored. Next, let us talk about the specific risks you need to manage this week. The technology sector is facing significant risks this week, primarily driven by regulatory concerns, ongoing supply chain disruptions, and valuation pressures. With the VIX at 26.8, investors should be cautious with position sizing, as current volatility levels suggest a heightened sense of uncertainty. Unexpected headwinds, such as geopolitical tensions or unforeseen economic data, could further exacerbate downside risks. To manage exposure, a disciplined framework is essential, focusing on diversification, stop-loss levels, and regular portfolio rebalancing. By prioritizing risk management, investors can mitigate potential losses and capitalize on future growth opportunities. Given these factors, it is crucial to approach the technology sector with a nuanced perspective, balancing potential upside with prudent risk mitigation strategies. And now for the strategic outlook. Where does technology stand heading into next week? Our strategic positioning for the technology sector this week remains cautiously bullish, driven by improving semiconductor trends, with sales growth projected to rise by around 5%. Investors should track the artificial intelligence theme closely. Remember, this is educational content and not financial advice. For more insights, like and subscribe to Financial Market Oracle, and comment your technology watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.